Tether's financials may be about to get leaked, which could give us an insight into what is actually happening under the hood at Tether with USDT. Yesterday, we had a lot of USDT FUD with people worried about a potential depeg. For now, the price is holding up. However, could things get worse for Tether over the next few weeks? Let's actually dig deep today into how Tether operates and exactly what could happen once these leaked documents do surface. We're going to explain all of that and also go through the market and more in today's show. So before we get into any of the Tether stuff, I want to go over what happened with Bitcoin and Ethereum over the last few days. So Bitcoin, basically, just to give you a quick market update, is essentially testing the 25K region. If we go onto the weekly chart, we can see we had a key weekly close underneath the 200 MA. Obviously, that is not a bullish sign for Bitcoin. On a more macro level, we know that holding the 200 MA on the weekly is a very important level. You only need to go as far back as August to see that a rejection off this level can typically lead to further downside. Bounces off this level have ended up marking key levels of support for major Bitcoin rallies. And it's not often that you have a confirmed breakout below and price action doesn't sustain downwards momentum for very long. So if we do kind of take like the historical performance of Bitcoin once it breaks below under the weekly 200 MA, we can kind of start to assert here that we are forming a significant downtrend, and maybe there is further downside. But the one caveat to that is Bitcoin has another week, another chance to tuck back in above, and then we can just call this a deviation fake out to the downside. However, there are structural components of this market right now that are indicating to me, for example, Bitcoin lagging versus equities, lack of strength during stock market pumps, as well as, a general market sell-off following FOMC and uncertainty surrounding the SEC and just general sentiment that could suggest that this downtrend may continue. And if we go into the daily, this shouldn't be new to anyone that's been watching my show, because we can see we are still in a clear downtrend when it comes to Bitcoin since we tested the 31K region, and we actually just had a bearish retest of the 26.5 level, which was previously support. We can see that was support multiple times back early in March. We almost got down there again in April, multiple times again in May, and then this level finally broke. You had your bearish rejection, so you had your SR flip, and then you have your move to the downside here. A target for that move, encompassing with like the head and shoulders pattern, is around the 23.8 to 24K region. That, until proven wrong, is still probably the target for now on this, but we still need to keep our eyes on Bitcoin over the next few weeks. It's going to be a bumpy ride, of course. The market, there's a lot of FUD at the moment, but it's important just to remain objective when it comes to TA and reassess, where we sit, and I'll help do that on the shows every time I stream. Having a look at Ethereum, though, that's when you start to see a little more weakness versus Bitcoin. ETH did break below its range high at 1790. It's now coming below a pretty critical level at the 1680 level. This was a region that acted as significant resistance before ETH flipped that into support, which kind of paved the way for that move up to 2000. You see deviation here above range highs, tucked back in below, and then you have your third and then your fourth lower highs rolling over for Ethereum to confirm your downtrend. So that did break below the previous range high at 1780 and is now breaking below the previous support level for the previous Ethereum rally as well. So this level for ETH, on the daily chart would really need to hold. If you start making daily candles below the 1680 region, then it's pretty much undeniable you do have that 1420 target staring you in the face for Ethereum. I think the ETH versus BTC drop-off was exacerbated by a lot of Ethereum liquidations. Obviously, ETH has a lower market cap than Bitcoin, so relative to Bitcoin, liquidations on ETH are going to hit the price harder, and also due to the liquidity, obviously much lower on Ethereum. There's a lot of Ethereum that's being staked, used in DeFi, so the actual amount of Ethereum being traded is obviously less than Bitcoin, and it also has less listings, although it's basically on every major exchange. But we could see that there was a lot of liquidations on GMX, so the perp dexes are actually quite a nice tool, because unlike exchanges where you can't really go into individual accounts and see whether people are getting liquidated or not, on perp dexes pretty much everything's transparent. if someone has been liquidated on chain, you are going to see that. And we can see there are a few major liquidations. You had a minus $27 million liquidated ETH long, followed by another guy in pretty much the exact same period. This might even be the same person on a different wallet, with a minus $9.8 million liquidation. And then we also saw around that period another 12.8 mil. So a few, big whales getting liquidated when the price wicked down at around 6:30 a.m. This morning. And that resulted in a pretty significant ETH drop. And we can actually see on GMX, a lot of people got wrecked by this, with the biggest P&L losses in months on the platform. So huge losses on GMX and also on some of the other perp dexes like Gains Network, cumulative P&L of minus 12 million. Now, who wins in this case? Well, the exchange wins, right? Because look at this huge uptick in fees, which obviously gets paid back to GLP stakers. So the winner in this case, when you have big liquidations, is of course the stakers of GLP on GMX. They are, the major beneficiaries, and we could see this via the huge spike in fees that did happen on GMX. So needless to say, that is one of the reasons why we had another rejection of our downtrend here on the ETH BTC pair. Now, this is something I talked about a lot. A couple of months ago, I was kind of hammering this ETH BTC chart home and saying, look, guys, in terms of buying altcoins follow Ethereum. So for me to get heavier into alts and increase my alt exposure versus stables and Bitcoin, I would need to see some sustained strength from ETH BTC because, when we trade, we always want to make sure we're outperforming Bitcoin. If you enter a trade and you're not outperforming Bitcoin, what's the point of the trade? Otherwise, you could just sit tight in Bitcoin, relax, actually get some sleep at night and know you're in a pretty safe asset, which is considered a commodity. If you can't beat Bitcoin, then there's literally no point in trading. You may as well hold Bitcoin. But when we look at the ETH BTC chart, that is going to be your indicator, obviously, of Ethereum strength versus Bitcoin, but as an extension of that, your strength of the entire alt market, because a lot of alts do end up following ETH. Now, recently, ETH has been performing better than the alts, because it wasn't named in the Binance and the Coinbase lawsuits explicitly as a security. Whether it is or not is another discussion, but we do have the CFTC saying Ethereum's a commodity, institutions more comfortable in Ethereum, and generally it's not considered in that SEC not safe token basket that your Solana, Matic, ADAs have been. That's resulted in pretty negative price performance for those assets. Ethereum obviously been holding up better than those assets, but still largely, until proven wrong, is indicative of the altcoin market in general. So for me to buy alts, at least more aggressively, I would need to see, firstly, I would need to see a higher high. I mean, it's basically just been a full downtrend for ETH BTC along this orange trend line, as you can see here, with, continuous lower highs, and you also have lower lows coming in as well. Are we going to make a new lower low now after making a lower high and push back down to that 0.6 level? Maybe. I mean, what I would need to see from ETH to get more confident in alts is a reclamation on the weekly of this trend, and ideally a reclamation of the mid-range with a candle close above the 6.9 level on the weekly. That's your first scenario for, really starting to flip bullish into alts. Your second scenario to flip bullish into alts is actually a support buy. So unless we get a clear reversal, I don't mind actually buying support and then kind of, betting on a reversal because you have clear invalidation below. So on ETH BTC, that would be the 5.6 to 5.7 region. Whether we get capitulation and this happens within the next few months, or whether this takes some time to play out and we don't see it until the end of the year or maybe early next year, we're just going to need to see. This is on the weekly time frame. This does take time to play out. But for me, this is still the clear range structure that we are in for ETH BTC, and this is one of the most important charts in crypto. So thought I would give you an update there, considering I haven't given you an update in a while. But TLDR is, for me to get really bullish on alts, I would need to see this flip to a bullish trend for ETH BTC. So aka we're going to need to make higher lows and then a higher high, clearing above the 0.7 region. Or the second scenario is, we come down and test the lows, and then I will make an ETH versus BTC kind of oversold trade. So what that means is betting on a reversal based on the fact we have ETH BTC at historical support levels all the way back from May 2021. And then that is, a decent place to have a look at alts as well. So if you don't want to trade any altcoins, we're about to get into the Tether stuff, which is a very juicy story. But if you don't want to trade any altcoins, or Forex or commodities, and you don't want to use something like a Bybit, which is now implementing KYC, especially, if you are in the US, Prime XBT does have a big 20% deposit bonus right now. So if you are looking for a new exchange, and yeah, let's say, you know, you don't want to go the Bybit route with the new KYC rules, etc., there is a pretty big bonus here. So just to give you a bit of context, it's a $7,000 max deposit bonus, which means, okay, let's say you deposit $1,000, 20% match would give you a $200 bonus, $10,000, $2,000, and up to $7,000. So you deposit $35K, theoretically, to max out your deposit bonus at $7,000. So pretty big sign up bonus for those that want to take advantage. However much, however little you decide to deposit, up to a $7,000 max, you'll get that 20% deposit match only for a limited amount of time. I think this is going to close very, very soon. And also only if you use the code Miles20, which is only accessible via the link in the description. So if you do want a new exchange for commodities, crypto, or Forex, they have a lot of pairs. We can see they've got the Ethereum pair as well. Prime XBT link is in the description with that deposit bonus as well. All right, let's get into Tether, because Tether was the big story yesterday. It was all over my timeline. Even I wrote, a small thread on Tether breaking down what was happening. And there was a lot of FUD yesterday. And the FUD started for a few reasons. So let's kind of go through a timeline of why the FUD started. And then let's talk about these leaked documents that could potentially allude to maybe more pain for Tether holders. But we're going to break that down as well. So essentially, what happened with Tether is people noticed that the curve pool started to get unbalanced. So what the curve pool is Curve is an AMM. It's an automated market maker. How automated market makers work, like Uniswap, like SushiSwap, like Curve, is that they need liquidity pools in order to facilitate swaps. So if you're swapping on the platform, you're basically swapping based on the liquidity that LPers provide. So, you know, anyone could deposit money into the pool. They get a daily or a weekly APR in order for providing liquidity, and that will allow people to facilitate swaps between assets. That's how AMMs work. Now, the 3 pool is basically a pool which is comprising of 3 of the biggest stablecoins in crypto: DAI, USDC, and USDT. So at all times, theoretically, this pool should be split a third. So it should be 33% DAI, 33% USDC, 33% USDT. That is the most, efficient way for the curve pool to operate. And theoretically, at all times, there should be an incentive for the pool to be structured in such a way that it's split up into thirds. But people started to notice something really weird, that for the first time since November, we saw a huge spike in the USDT ratio and curve. So if we look at USDT liquidity on the 3 pool, when rumors started to surface about USDT, it was 43%, which is already, way overweight where it should be. But then over the following hours, it started to push up into the 70 to 76% region. Now, that is very unbalanced. And when you have an unbalanced liquidity pool, that can lead to a lot of issues. Obviously, a lack of liquidity for swaps, but also high slippage for swaps. And what you can sometimes see is liquidity pools getting drained. So USDC and DAI getting drained versus USDT, and then it's not possible to swap. And the whole thing just gets chucked out of whack. And the problem is a lot of DeFi protocols rely on Curve. So they kind of take liquidity from Curve to facilitate swaps. So there is like systemic second order, third, fourth, fifth order effects from imbalance in the Curve pool. So when people started to notice this, a lot of panic started to arise. Why is USDT the ratio increasing so much? And the reality is because we had unprecedented inflows. So we can see here with concentration passing 50%, that there was a historic amount of inflows. This is the 48-hour flows. You can see money flowing into USDC, money flowing out of USDC and DAI. What does it mean when USDT is flowing in and USDC and DAI is flowing out? It means people are swapping, right? It means people basically are putting in USDC to get USDT, to get USDC and DAI out. So when you see the USDC and DAI balance decreasing, it's because that pool is getting depleted because people are swapping between USDT into USDC and DAI. Now, theoretically, the pool should balance out based on the incentives that you get for providing liquidity. But in the short term, this discrepancy started to widen and widen and widen, and it made people start to panic. And Tether, as a response, did actually lose its peg for a brief period of time. Now, you can't see it on the CoinGecko graph, but there was a wick down to, on some exchanges, on the illiquid exchanges, 97 cents. That was very short-lived. It was like a couple minutes, and then it went back up, and it settled around the 99.5 level. Now, 99.5 is still like a 0.5 percent decline for Tether. That's still, I guess, for a stablecoin, notable. Now, it's nothing like the USDC depeg where we saw, I think the 10% at one point, 15% decline to 85 to 90 cents. That was significant. But it's still something to take notice of when a stablecoin is down 0.5%. However, it did balance out, and it turned out that the depegging was short-lived after a pretty substantial initial panic, which in my opinion was actually driven by on-chain whales. So what created the three-pool ratio for USDT increasing so significantly was the fact that you had big whales, for example, 𝗕𝗏𝗧𝗏 swapping mass amounts of USDT into USDC, and you also saw some big traders actually go short USDT. So it was basically what you could call an attack, and the Tether founder came out and said later it was an attack on Tether because you had, I guess, a coordinated series of whales. And we don't know if it's coordinated or just, they're being opportunistic, but we had a lot of whales at one time come in and actually short USDT, which did result in the depegging. Look on Chain did a thread, which breaks down the whales that started to actually short USDT. So what they were doing is they were depositing USDC into a money market like 𝗲𝗍. They were taking out USDT, and then they were dumping that USDT, so swapping it out back for USDC. So if USDT depegs, they can repay their loan in USDT terms, and since their collateral is in USDC, they'll make the difference, right? So it's effectively a way to short USDT on chain. But in order to actually execute a short on chain, you need to dump USDT. How do you swap USDT? Well, you deposit it into the three pool, and now you can start to see why the ratio was increasing so significantly. Now, where do things sit right now? So that's what happened yesterday. Well, right now, USDT in the three pool is still 60%. This is still way too high. This can cause a slight imbalance. Now, it's not necessarily going to cause like a massive depeg or anything, because at the end of the day, 377 mil, which is the total TVL of the pool, still in the context of Tether is not much, but it does, as I said, have ramifications for DeFi. So for the stability of the entire DeFi ecosystem, I would like to see this ratio return at least as close as possible to parity. I'm sure that will happen over time, but this just indicates to me there still is a demand for swapping out of USDT. I think people are de-risking a bit, but I think people were kind of slightly calmed a little bit by Tether's statements, which we're going to go into now before we get into the leaked documents, which may actually be the reason why Tether crashed in the first place that not many people are talking about. So 𝗏𝗏𝗏 𝗏𝗏𝗏𝗏, I think is how you say it. Anyway, 𝗏𝗏𝗏, who's the CTO/founder of Tether, said markets are edgy these days. It's easy for attackers to capitalize on general sentiment, but at Tether, we're ready as always. Let them come. We're ready to redeem any amount. Funnily, he was so nonchalant about the whole situation that he was actually posting memes. Like, I mean, I don't know if I necessarily love the fact that big founders in crypto kind of just post memes when things start to seem a little bit shaky. I mean, imagine if Apple stock started dropping and Tim Cook started doing memes like Apple FUD or something like that. Reddit, like it'd be. I mean, that you'd never see it, but I guess crypto culture is very different, and the way people respond is extremely different to how you'd see it in equities. So I guess the number one question you have to ask yourself is, when you see a USDT depeg, you need to look at the facts, right? And don't speculate, don't FUD. Actually look at the facts. The facts are this. They have $3 billion more dollars worth of assets and liabilities according to their audit. So according to page 5 of their 2023 Q1 report, the group's consolidated total assets amount to $81.8 billion, and the total liabilities, aka the amount of USD that they are actually keeping custody of in order to underpin USDT's price, is $79 billion. So by their reports, according to their audits, they have a $3 billion premium. Now, whether you believe this audit or not is another question, and that's where these leaked documents come in. But that is essentially, where things stand in terms of their balance sheet. They've been so profitable, Tether, because basically what they do is when, let's say, you deposit a dollar into Tether will go and put that dollar, so they'll mint a USDT stablecoin, and they'll go put the real dollar that they received into treasury bills, short-term bills that pay, let's say, 3 to 5% per annum, and on that yield, especially in a higher interest rate environment, they earn more yield. So on that yield, they're making a profit. And if you want to redeem your USD, you don't get the profit. You just get your USD back. So the way Tether actually makes their money is by loaning out your money. Very similar to a traditional bank. I think in crypto, they have one of the leanest and most efficient models. If they're being transparent with their balance sheets, of course, and if everything is tidy from an accounting and a legal perspective, then they have one of the most efficient business models I've ever seen, because they're basically a bank, but the biggest crypto bank that essentially is taking people's money, lending it out, in this case to the US government in a way, and earning a yield on that. Now, because they're earning so much money and their profits were so substantial in Q1, they actually decided that, look, we can start building crazy war chests of Bitcoin here. This was actually a pretty bullish announcement for Bitcoin itself, because now you have Tether, who are making significant profits, investing up to 15% of their net realized operating profits every single month towards BTC. So I think we're going to start seeing Tether challenge MicroStrategy for the title of the biggest Bitcoin holder. I think Tether already holds 1/3 of MicroStrategy's holdings. I think it's 50,000 Bitcoin, which is a shit ton, and I only expect that to increase over time till eventually Tether, in my opinion, overtakes MicroStrategy. Why? Because they're so efficient in their business model that they can afford to keep buying Bitcoin. MicroStrategy, although it's a tech company, I think has more constraints, and just in general, I mean, factually is a less profitable business than Tether. Now, let's go back to this leaked document thing and USDT. So look, we know that according to their audits, Tether has enough assets to cover liability. So theoretically, in the event there was a bank run, let's say the 3 pool gets drained, there's lots of panic, people want to get out, there's shorters, there's a short event. Theoretically, arbitrageurs should arbit back up to $1 because they can take that USD, put it into Tether, and redeem it 1-to-1. The only caveat there is Tether does hold some short to medium term T-bills, meaning it can take potentially up to 3 months for them to get their money. So it doesn't mean you won't get your money. There's just, like, in the short term, theoretically, if a mass bank run was to happen, they may not have all their assets on hand at one time. Just like a bank, right? A bank would never keep all its dollars on time because it's loaning some out and it gets loaned back, etc. The theory here, though, is that there wouldn't be enough people withdrawing their Tether at once for Tether not to be able to handle redemptions. And theoretically, look, if they did get tested, within a couple months, once their bonds mature, then they could theoretically pay those people out, given the fact they have a $3 billion premium. Obviously, not a situation you want to stress test, but theoretically, if the audits are correct, then they could do that. But things took a turn, right? After all of this FUD, some news started to break, and it was broken by an announcement by Tether on their page on June 15th, which says Tether on foil and continued commitment on transparency. So this is what Tether actually said in their official statement. Shortly after the settlement of 2021, CoinDesk sought, under New York's Freedom of Information law, public disclosure of materials relating to the first of Tether's quarterly reports. This morning, the New York Attorney General's office provided responsive documents to CoinDesk. They provided these documents because Tether decided to drop its opposition to CoinDesk. We find it suspicious that today's attack, and notice that they're calling it an attack, on USDT via both DeFi and centralized exchanges occurred on the same day that materials were handed over to CoinDesk. This timing raises questions. All the same, Tether has nothing to hide, and we hold the utmost confidence in the accuracy of our figures, or the sensitivity that we had to a government agency releasing confidential data, at least as it pertains to Tether reserves, is lower now than it was in 2021. We remain vigilant about our customer data. While we cannot count on fair coverage from CoinDesk, it's a weird line we're going to get to in a second, which often misrepresented Tether's position in the market in favor of its main competitor, aka USDC, we call upon them to set their bias aside and to not publicly share any past or current customer names, and not to thereby put anyone in the community at physical or digital risk. Okay, what is happening here? Tether is front-running something. Tether is front-running something. They are front-running an article, right? What they're alluding to here is the fact that CoinDesk is going to come out, presumably over the next few days / week, with an article that makes potentially what Tether is alluding to unfair coverage or allegations. Tether knows something. So I don't know whether they know something, horrible, or whether, they're right and they're transparent, which we got to give them the benefit of the doubt, or what the allegations against them will be, or what the findings will be. We don't actually know what these leaked documents will contain. But what we do know is that they are anticipating coverage from CoinDesk. And they said, we cannot count on fair coverage from CoinDesk. So Tether, I think, putting out a statement like this shows that they're concerned. Maybe they're concerned for good reason. And they're fully transparent. And the reason they're concerned is because they know CoinDesk has a history of fighting them, and they don't want to be fudded. Or maybe they're concerned because there are some revealings or findings that are going to come out that doesn't bode too well for Tether. So Adam Cochran said, apparently the market action, so this was, one of the reasons why there was short events and attacks on Tether, is because the financials have been leaked to CoinDesk. Tether front ran it with a blog post saying that we can't trust CoinDesk results. This should get interesting. As of now, there has been no CoinDesk Tether article. In fact, just while I've been let's go through CoinDesk's site to check if there has been an article, just in case we have missed it since I started this stream. But I don't think that article is out yet. It may not come out. Maybe Tether's statement ended up putting them off. Maybe there's legal action behind the scenes. We don't know. All we know is that Tether is anticipating something from CoinDesk. Small cap scientist says, well, there it is. New York AG turned over documents to CoinDesk showing reserve issues. Tether claiming they are outdated documents. We will see. The 3 pool was a canary in the coal mine yesterday, aka, a warning sign. Insiders were offloading USDT. Hopefully some of you listened. Let's see what actually happens. I'm not panicking. I think the major detriment to USDT might not be this article, but it might be potential DOJ action. That's always kind of a looming threat over Tether. Now, not to say that the DOJ would win or they have any claims. It would only really check out if Tether was genuinely doing something ill or wrong. But theoretically, what would really kill Tether at some point is a DOJ action, a freezing of assets, let's say if they were doing dodgy auditing, and that could result in panic and a mass depeg. That is your bear case that I don't think is happening, but I just wanted to put the bear case out there. Now, 𝗕𝗆𝗨 claimed that yesterday's, like in the article, actions were an attack against Tether. He said they didn't have much power anyway, and it's already dying off. The attack is a good stress test for us, nothing more. And I would actually agree with him here. Tether is being stress tested from a DeFi perspective, and so far it's holding up. Look, a little bit of shakiness, a little bit of panic, a little bit of a depeg, but so far it's holding up. We'll demonstrate, as we did several times in the past, that Tether is strong, liquid, and ready to protect its community. But the day is ending on a positive note. Tether decided to drop its opposition in the foil manner, the old CoinDesk thingy from 2021, which, he's alluding to the article that they released. He's kind of brushing it off by calling it an old CoinDesk thingy. Let's see when the CoinDesk article comes out what it actually is. So, are you even safe in stablecoins anymore? I kind of did a funny tweet yesterday night. I said, UST depegged, so I withdrew from Anchor and swapped it into USDC on FTX. FTX started collapsing, so I moved all my USDC over to Binance. Then USDC depegged, so I swapped it all to USDT. And then Binance FUD started surfacing, so I moved it all to a Ledger. Ledger FUD started surfacing, so I moved it to a 𝗕𝗧𝗏. And now there's USDT FUD again. Now, obviously, there's this post is slightly satirical. These exact order of events, I don't know if they happened. Something like this probably happened. But the satire I'm trying to get across here is that where are you even safe in crypto anymore? I mean, it's not like you can just go for a holiday, have a nice beach holiday and switch off for a week, considering every week it seems like there's some new FUD or some exchange going down. And I think the problem is because we've seen it with Luna and because we've seen it with FTX, a lot of the time where there's smoke, there's fire, and it's just not just worth the risk. Like even yesterday, as things started to develop, 99% chance nothing's wrong with Tether. But that 1% chance that there is a deepening, that 1% chance there's something wrong, was enough of a reason, if you were significantly exposed to Tether, to swap some out, so de-risk, or actually go short on chain. So there's a very valid strategy, and it's during times of significant concern, go short on chain as a hedge, especially if you hold a lot of USDT, or you just want a general hedge to the market, because if USDT collapses, the entire market collapses. The effects of that would be brutal on the altcoins and Bitcoin and Ethereum. So one way to protect yourself against that would be hedging. I actually do view as shorting USDT during a FUD event, although you might lose a bit of money due to fees and maybe funding rates, in this case on Aave, it's like 2%, Radiant 10% per annum. Although you may lose a little bit of fees, you're paying a fee for what is pretty big asymmetrical reward. So the reward of a USDT depeg, or which may come from DOJ action or some sort of leak, whatever, the reward is so much bigger than the risk. The risk is, a bit of fees, A couple percent were APR a year, maybe some funding rates if you're doing it on perps. But the reward could be millions of dollars if you actually do get the short right. So I actually view hedging as plus EV for that reason, even though nothing's probably wrong. Not saying you have to hedge now. I think yesterday it was much more pertinent. But if you are worried and you really are panicking, well, there's a way out for you. You can diversify into other stables, or you can hedge short. There are two options for you. Look, for me, I prefer to be diversified. I don't see the point in keeping all my money in USDT or USDC or DAI. Like, why not go a third in each? Keep some real fiat, keep some Bitcoin, keep some Ethereum, put that in different exchanges and wallets, and really diversify across a variety of assets. There's no reason to be all in USDT, right? Now, I actually think, in my honest opinion, USDT is the safest out of all of them. If I had to pick, if you had to ask me, Miles, if you had $100,000, where would you park it for the next 5 years, Tether or USDC? I would lean Tether. Now, in practice, I would diversify 50-50 or 70-30 or 60-40, whatever, 65-45, whatever you want, 35, sorry. But if I had to pick, I'd probably pick USDT, just due to the fact that it doesn't have the US centralization issues that some of these other, aka USDC stablecoins have. The regulatory risk with the Coinbase involvement, we could see a similar thing to BUSD where they're forced to delist. So that is what happened with Tether. This is a situation that I'll continue to monitor. If the CoinDesk article releases, of course, I'll update you guys on my Twitter, and if I'm live, I will also update you that on stream. But that is what happens. That is where we sit. I'm not worried, but it was, a slightly concerning day, and we're still not fully out of the tunnel yet. We still need to see what is in this article. Now, it may just be FUD, like Tether said, but I just wanted to make you aware that these documents are releasing soon. Now let's get into the market. There was big updates, huge updates overnight. We had a BlackRock ETF announcement. We had Hong Kong article that came out. We had Celsius announcing they were selling alts. Let's get into those three big stories before we head off today, because yeah, it was a massive day of news. In fact, it's been a massive week for crypto. We started with CPI. We had the Binance hearing, the Coinbase motion as well. Then we headed into FOMC, slightly more hawkish than expected. Market dropped. We had the SEC sanctions late last week, of course. Then, heading into USDT FUD. Now we're getting major announcements yesterday that we're about to talk about, heading into the weekend, which recently has been very volatile. I mean, it's been a crazy week in crypto. It really, really has. It's kind of funny. A couple of weeks ago, everyone was saying, oh, the market's so boring. Like, I wish the market would move. Well, you got your wish, I guess. Maybe people didn't want it to move to the downside, but at least we can't complain the market's boring anymore. It certainly has not been a boring week by any stretch of the imagination here. A lot has been going on. So before we get into the latest news from yesterday, I actually want to introduce a relatively new show partner, which is CoinWeb. It's basically a crypto wallet, a secure wallet that has a great iOS app. So if you're looking for a place to actually store your cryptocurrency and you want a safe place to do it, CoinWeb is launching a new product that you actually could take part in a $1,000 giveaway just if you join the club using the link in the description to access the pre-launch for the CoinWeb wallet and obviously try it out. So yeah, it's basically that simple. Basically, there's a couple benefits versus a typical wallet. The main one being the composability of being able to design, set up, and issue your own cross-chain tokens, which is a pretty cool option for those that want more cross-chain flexibility, if that interests you. Or, of course, you can just use it as, a normal wallet to store your crypto assets in. So yeah, link in the description to get early access for that $1,000 reward. You just got to follow them on Twitter, join their Telegram, and go onto their quest board. But there's a link in the description to CoinWeb if you would like to check it out. Let's go through the market update now. The big news. So quickly, let's just go into CoinGecko and actually look through the biggest gainers and losers, see if there's any outliers. Stacks outlier. Why is it an outlier? Well, it's an outlier because of what I said in my tweet the other day. Let me get the tweet up. Basically saying, look, there's SEC tokens. I did a video on this yesterday, by the way, if you haven't watched it. There's SEC tokens that are being monitored as securities, and then there are assets which are being considered non-SEC tokens. And what I'm seeing now is a divergence in terms of relative strength between the SEC-resistant tokens, so the ones that haven't been called securities, versus the tokens that have been called securities. And Stacks, as well as some others, have been leading the pack. So that's one of the reasons why they performed well. And some of these other tokens are performing well as well. So that's something to keep your eye on. Ethereum Classic being a proof of work coin as well. Rocket Pool being part of a strong LSD narrative. There are reasons why things are pumping. KuCoin, not sure exactly why. May just be, a general shifting of the tides given what's happened recently with Binance. In terms of the biggest losers, no surprise, Polygon. Obviously, they've been in the face of pretty significant SEC action. They're one of the biggest losers. Are they one of the biggest losers? Which is surprising because a lot of people were hedging short on USDT. So theoretically, their fees should have gone up. But short-term reaction. Basically, market pretty flat though overall. Some of the metaverse tokens starting to flick back into the neutral zone. But yeah, pretty flat market in terms of altcoins, at least in the last 24 hours. But obviously, we had that huge FOMC dump. So it's natural for the market to start to correct. One more thing I want to mention when it comes to stablecoin FUD, actually, that I forgot to talk about is the fact that basically every time there's stablecoin FUD, so USDT or USDC, etc., that marks a local bottom. Literally the past 3 times there's been FUD, it has been a local bottom. It's not even funny anymore. So, we had a huge Tether attack in June 2022. That was the local bottom before, a 40% move, or actually 60% move to 25K. Luna Crush then had announced that the week of 12 to 19 November was the highest Tether FUD in 6 months since the June Tether FUD. So max FUD then resulted in that being a local bottom. And then we also saw USDC's Depeg be a local bottom. So the last 3 times, 1, 2, 3, it's been a local bottom. Will it happen again? Who knows? But I think it is a fun fact that stablecoin FUD often marks local bottoms. Ched's actually, if you're an OG and you used to watch the channel, Ched's used to be a trader on Crypto Banter. Very good, amazing trader. He actually agreed. He said, yup, going long on Bitcoin when there's a stablecoin fears has a 100% strike rate. And funnily enough, Bitcoin is actually up. Look, I know if you look at that chart, it looks like it's down, but that's because we are on the daily. If you go into the hourly, and we, disregard my messy red lines here, you can see that this was the stablecoin FUD here. That's when I tweeted. And since then, we're actually up almost 3%. So even that, on very short-term timeframes, is a local bottom. Clearly, we need to see that play out, though, over the next couple of days until we can verify it was an official local bottom. All right, second bit of big news was Celsius announcing that they are selling all altcoins from customers. A little bit of a nothing burger, but it's important to note that there still is $215 million worth of altcoin pressure. It adds to what is still a relatively significant supply overhang on the crypto market. So Celsius, Matic, ADA, Link, LTC are the ones that are being sold. You can see the tokens they hold, the holding value, the market cap, and their percentage holdings. Keep an eye on this list. Look, it's not much. So especially this bottom half, 3-5 million is doing nothing to the market. But Celsius, Matic, ADA, that is significant. So I would say keep your eye on these. Unfortunately, Matic and ADA are getting sell pressure at a time when Robinhood wallets are being forced to sell before June 26th because they've been named securities and Robinhood is delisting Matic and ADA. So if you're a Solana holder, Matic holder, ADA holder, unfortunately, it's a rough month for you. But I'm actually buying some more Matic and Sol, not financial advice, during this period because of the supply overhang. So be it. There is also supply overhang in a more macro sense with Bitcoin and ETH with, sorry to bring this up again, but Mt. Gox, which is coming soon, which, look, yeah, we've talked a million times about Mt. Gox. Undeniable that there's going to be sell pressure, undeniable that it could affect the market in a negative way. You've also got Silk Road, US government, Bitcoin sales still occurring quarterly. Undeniable it's a net negative, but will it be this huge catastrophic event? Well, I've already gone through the maths. You can watch in previous videos. Just search Crypto Banter Mt. Gox, Miles Deutscher Mt. Gox. You'll see the videos. I've done full edited, scripted videos on this with math. But the TLDR is, yes, it will impact the market. No, not as much as people would like you to think. Okay, something that could affect the market, though, is Hong Kong. Because we're seeing this shift from the US to Asia happening at an increasing pace. I found this very interesting. The Financial Times released an article with the headline, HSBC and Standard Chartered pressed by Hong Kong regulator. So these HSBC and Standard Chartered are two of the biggest banks in Hong Kong, by the way. Pressed by Hong Kong regulator to take on crypto clients. So at the same time that you are seeing the US get rid of the crypto banks, Silvergate, First Republic, Silicon Valley, you're seeing Hong Kong trying to open the door for more crypto banks. So Hong Kong policy is literally the opposite of the US right now. So whether you think it's the US being prudent, as Nick Carter says, or it's starkly clear, Hong Kong sees failed American policy as a huge opportunity for them. And, when we remember, Hong Kong is a special administrative region of China. So look, I know Hong Kong isn't China, and I know crypto policy in Hong Kong isn't indicative of mainland China. I know. But technically, it is still an administrative region of China, meaning anything that is done in Hong Kong in a roundabout way is having some sort of overview by China. And China, you best believe, is watching this very closely. And in my opinion, is almost using Hong Kong as a test run. This is a test pilot run to see how crypto can be regulated and how it responds in a smaller environment, Hong Kong being, more of a global trade kind of region. And if it does well, this could open the door for more lax policy on mainland China. This is also a way for Chinese mainland investors, a much easier way for them to invest in cryptocurrency. Now they don't need to do any crazy offshore thing. They just need to, set up brokerage in Hong Kong, which look, maybe not as easy as it seems for the average person, but businesses at least, they can do it. So this is a big shift. Do not deny how big this shift is from the US to Hong Kong. What's funny though, is that today, things started to almost shift back to the US discussion. Now, I'm not going to go too far into this in today's show. This is a theory that I've spoken about in the past and on my TikTok and Instagram as well, if you're following me over there. But basically, I've got this theory. I'm about to do a tweet on it. And 𝗲𝗕𝗄𝗧𝗫 touches on this as well, that if BlackRock's spot ETF gets approved, because they just filed for a spot ETF, BlackRock, one of the biggest asset managers in the world, we can see here, 𝗖𝚗𝗶𝗄𝗏 Trust officially filed $10 trillion BlackRock is how much assets they hold under management. So 𝗲𝗕𝗄𝗧𝗫 says, if BlackRock's ETF gets approved, it's undeniable that Operation Choke Point 2.0, which is the recent action against crypto on and off ramps in the US, was orchestrated to drive out crypto native companies, aka Binance, Coinbase, what the US would consider to be crypto cowboys, and bring in large traditional firms that are buddy with the US government to try and control Bitcoin crypto. So I don't think the US is trying to kill crypto. I think what's actually happening is the US is trying to regulate crypto and control crypto in the only way it sees fit, and that is getting rid of the old crypto unicorn billionaire businesses that made billions of dollars while TradFi sat on the side and lost out on all those gains during the 2020 and 2021 period, and is now deciding to, take action against those guys. Maybe it feels jealous, threatened, who knows, in order to step in and control the space through big TradFi partners. If BlackRock's ETF gets approved, I think it's almost undeniable that's what's happening. But to be honest, that's the vibe I'm getting. JP Morgan, Goldman Sachs, is the SEC calling these cryptos, these altcoin securities, paving the way for registered exchanges, brokerage exchanges from these big fish, whilst Coinbase and Binance, etc., can't get licenses. Potentially, and not even potentially anymore, it looks like that's what's happening. It looks like a turning of the tide for the US. So yeah, the US is killing crypto, but killing crypto is only a short-term vehicle to controlling crypto. Kind of scary on the one hand. On the other hand, you could make the argument it's bullish for Bitcoin and maybe ETH and maybe some altcoins, especially Bitcoin and ETH though. So it's kind of a weird one because crypto's not really built. I mean, it's censorship resistant at the end of the day, but we don't really want this kind of crazy control. But look, it's not what we want's not in our control. All we can do is step back, trade on the information we have, and the information we have is BlackRock is now interested in this ETF, and I don't think they're the first ones. I think we're going to see other TradFi firms enter the market. Now, SEC has rejected a lot of ETFs, but this is BlackRock. This is a 10 trillion AUM company. These are big fish. They basically control the American economy. They have a much better chance than Coinbase of getting an ETF. It's funny because the BlackRock CEO, Larry Fink, famously, in 2017, I think it was, called Bitcoin an index of money laundering when Bitcoin was just 6K. Funnily enough, I think it was that year or the year after that I actually first bought my first Bitcoin at 5K. Today, they've filed for a Bitcoin ETF 6 years later. Will says everyone gets Bitcoin at the price they deserve. Well, maybe they're going to get it at 25K. Better than getting it at 69K, that's for sure. So, what can you do? But yeah, very interesting. Crypto Skull also kind of says what's happening as well, with SEC suing everything, BlackRock buying massive amounts of crypto. I don't know if this is verifiable. To be honest, BlackRock announces a filing of an ETF using Coinbase. So Coinbase is a custodian. We'll see if that passes, but that's currently what it looks like. Hong Kong putting pressure on banks to take on crypto clients. 10-year-old USDT FUD. Something is brewing. I'm taking the biggest bull market. I'm talking the biggest bull market. One must be foolish, not accumulating here when the biggest asset manager in the world is getting in. Look, before we get that excited, let's just wait and see if they get approved first. All right, before we get too excited. But interesting shift and pretty big news. The Great Reset is coming. Well, we hear this every year, but in a roundabout way for crypto, yes, it's happening right now. Your reasoning sounds logical. I think it is. I mean, look, there's two scenarios here. The US genuinely is just killing crypto. Okay, then it goes offshore. Or the US is killing crypto as a vehicle to gain control. And in that case, it could end up being bullish for things like Bitcoin and ETH. Very interesting. Someone said they mentioned minor news about other chains. Meanwhile, Dell joins 𝗕𝗏𝗄𝗏. I mean, I'm happy to look into 𝗕𝗏𝗏. It's just not on my radar. I have a select amount of tokens that I'm researching and I'm bullish on. 𝗕𝗏𝗏 isn't one of those, but you're saying it's funny how you could show their face and not mention it. I don't purposely not talk about any token. People think I've got some agenda against certain tokens. Not the case at all. It's usually a lack of understanding. I'm not going to talk about something if I don't understand it, because that's just not really my motto. I want to only talk about things I understand. And two, if I don't talk about something, it might just be because there's bigger things that I want to discuss. Sure, I'll talk about it at some point, though. 𝗕𝗏𝗄𝗃. I'm not ignoring that it exists. It's just today is about Tether, not 𝗕𝗏𝗏. But altcoin. So yeah, I'll look into it, bro. I'll look into it. Definitely open to looking into it. Someone said they did good shorting 𝗵𝗵𝗏. Guys, we called the 𝗵𝗵𝗏 short so amazingly well on this show. Now I'm not still open, so I can't collect cloud on making 1,000,000%. I did close my position, but let me just show you when we did short 𝗵𝗵𝗏 live on the show. We shorted it on the breakdown, and the winner of the Bybit trading comp, David, who you guys have probably seen on the channel, who turned $400 into 100,000. He said that his short, which was the competition winning short, was actually because he watched my show. This was amazing, by the way. He watched my show. He saw I was shorting this breakdown here of the wedge and then the horizontal retest on the 4-hourly. And he said that he opened a short off the back of the show, which helped him win the comp, which is incredible. Because this breakdown was a 45% move. You add 10x leverage to that, 450%. And now that move, just in terms of spot, now I'm not still holding. I'm not collecting clout because I'm not still holding. But it's down 68%. Now I cut my losses roughly at 40%. Not losses, sorry. Cut my short, which was a win on the losses because it was a short. So we did very well off the short. And if you're still on Degen Ed, congrats. Actually, 𝗵𝗵𝗏 is at support now. So if anything, this is now a long. If anything, this is now a long. But look, very shaky long. So I wouldn't go too crazy on that. Let's go through some of the other comments. Let's see what else is happening. Look into 𝗕𝗏𝗏𝗏. What's with the oily hair? It's not oily. I actually just had a shower, so it's actually still wet. But yeah, I actually have showers. I stream in the morning. I usually have a shower before the show. It's still drying. So yeah, that's actually what usually happens with that. So yeah, maybe I should, I don't know, have a shower earlier in the future. But usually I do my research, have a shower, reset, have a coffee, stream. That's usually I just like it to wake up a bit in the morning. What else is going on? All right, I think that's it for now. On the weekend, I'm releasing a video on two videos. AI stock market overview. And the second one, which I think is of particular interest, is how to research and find crypto gems using ChatGPT. I think it's going to be a banger, so keep your eye out for that on the channel on the weekend. I also have one more offer. We talked about this yesterday, but if you missed it and you haven't taken advantage yet, there's a $10,000 mystery box to be claimed just for signing up to OKX using Hair is Good. Yeah, I mean, whatever. Who cares? It's just hair. We're here to talk alpha. So yeah, whatever. But yeah, there's a mystery box of $10,000 just if you sign up to OKX using the link. Don't need to deposit. But if you do deposit, my microphone just fell. But if you do deposit, more than $50 onto the platform, you will get an additional mystery box of up to $10,000. And if you trade, checking my mic still on, we're good. And if you trade, and you unlock the rewards based on this chart, so the more you trade, the more you earn, you can unlock another $10,000 in rewards. So look, 3 tiers for different kinds of people, up to $30,000 in rewards. Massive giveaway. Remember, a $10,000 mystery box doesn't guarantee you make $10,000 of signing up, obviously. Otherwise, that would be too good to be true. It's up to $10,000. So it's a mystery box. You could get lucky. You could win $5 or $10 or $100 or $1,000 or $10,000, or you can win nothing. So it's a mystery box. But if you want to try your luck and you're in the appropriate jurisdiction, obviously US users cannot KYC on OKX, then there's a link in the description to register for an account, sign up to unlock up to $30,000 in rewards. You have to use the link in the description, though, to be eligible to give you this link to the Banter campaign page. Just want to remind you of that as well. Okay, I think that's it for now. Checking the comments once more. Someone said scam. It's not a scam. It's an exchange bonus, which I think is good for the community. So obviously we make money off ref links. That's no secret. That's one of the ways we fund the channel and monetize the channel. YouTube ad rev doesn't exactly pay much, but we would only do it if there was a benefit to you, and you get the benefit of the bonuses that these companies give us. So if you were to sign up, if you're looking for a new exchange and you're to sign up through OKX through your own accord, just by Googling their website, you won't get access to these deals. Since we have a big platform, we can negotiate these big sign-up bonuses, which benefit obviously us through referral sign-ups, but also you. So I view it as a win-win situation. Certainly not a scam, but of course, if you're skeptical, read the terms and conditions. Obviously, read the terms and conditions with anything before you sign up to it. First place to start deep dive, buddy. Revive this channel with 𝗕𝗏𝗄𝗽. I'm happy to look at 𝗕𝗏𝗏 at some point. I'm happy. Bitcoin pumping? Is Bitcoin pumping? Is it pumping? Are you saying it's going to pump? Because unless my chart's outdated, it doesn't look like a pump to me, at least not on the 1 hourly. But we do have Asian open in 2 hours. I mean, it's not really a pump, bro. It's not a pump at all. Unless my chart's stuck. Let me check another chart. No, not a pump. Maybe you mean it's going to pump? Maybe. Why don't you talk about NEAR anymore? No updates. No updates for you there. Really, the ecosystem's been quite dead. So there's nothing exciting to talk about there. Yes, we've talked a million times about what it can do, but I'm not that heavy on NEAR until, and I'm not accumulating alt L1s like crazy until we start to see some of the ecosystem develop. I mean, you only have 30 mil actually on NEAR, and a lot of it's just been in freefall, and Aurora as well been in freefall. So, you know, not the most bullish of statistics. Still could be a decent alt L1 bet for next cycle, but, you know, full disclosure, I'm not so heavy NEAR or alt L1s in general for next cycle yet. Okay, cool. I will see you in the next video. Hope you enjoyed this show and learned something about the Tether FUD or the recent news or the charts, whatever floats your boat. I will see you guys on the weekend for some AI content, AI crypto content to help you become a better investor. And I'll see you later. Peace out.